Hi everybody, welcome back to the BizTech Academy. Steve here, and today it's a different sort of video compared to my normal company reviews. Today I'm starting a series of 6 videos that are focusing on options, option trading, and option strategies. The aim of this series is to try and demystify some of the myths surrounding options and option trading, and also try and introduce you into some option strategies that may help you yield more benefits from some of the investments you already hold, and also to reduce the risk of loss in some of the investments and the trades that you're considering. As I said, this video is the first series of 6, and I will be doing more in addition to the 6 if there's enough interest. And to that end, if you do like this video and you want to see more videos on options and option trading, then please give us a thumbs up and subscribe to the channel. Any support you can give us, of course, is greatly appreciated. Okay, so although I will be jumping straight into option trading strategies from tutorial 2 onwards, in this first tutorial, I want to go back to the basics and give those that are considering using options as part of their investment armory a true understanding of what options are, and we'll start by the definition of an option and why they exist. So what is an option? Well, an option is a contract that you can buy and sell that grants the holder of the option the right, but not the obligation, to buy or sell the underlying asset at a certain price within a specific time frame. Okay, so any of you who've seen any options for beginners videos before will certainly have seen some form of definition like that. But what does it really mean? Well, to help that and to help beginners with that, I've created a 5-item checklist that should help everybody avoid mistakes, especially in the early days. And I'm going to run through each of the 5 items in the checklist now and explain each one individually, and then I'm going to combine them all and show how they're used in the practical application of basic options. Okay, first off, an option grants the right but not the obligation to buy or sell an underlying asset. So now we have the first item in our checklist, and the first item is the underlying asset. But what is an underlying asset? Well, an underlying asset can be one of many different financial assets, including company stocks or equities, bonds, commodities, market indices, interest rates, fiat currencies, and even some cryptocurrencies. Okay, so we have the first checklist item defined, that being underlying assets, and it can be one of many assets. And for the purposes of this video and all the examples I'm going to go through, I'm going to go with equities or company shares, and I'm going to choose shares in Apple. Now, the next item on the checklist, now that we have our underlying asset, our Apple shares, is to decide which type of option we want to use with this underlying asset, with these Apple shares. And there's basically 2 types of options. There's a call and there's a put. A call option gives the holder the right to buy the underlying asset and is typically used when traders anticipate the price of the underlying asset will rise. A put option, on the other hand, gives the holder of the option the right to sell the underlying asset and is generally used when traders expect the price of the underlying asset to decrease. So in its most simplest form, if you expect our Apple shares to go up in value, you would buy a call. If you expect them to go down in value, you would buy a put. Okay, so we have the second item now defined on the checklist, and for the purposes of this example, I'm going to think that Apple shares are going to increase in value over time, and therefore I'm going to buy a call. Now, moving on to the third item on the checklist, we now need to decide whether we want to buy the option or we want to sell the option. I've already mentioned before that we want to buy a call because we think Apple shares are going to increase, so we're going to choose to buy a call. But it's important to note that options can be bought and they can also be sold. The implications of buying or selling an option can be quite different, and this is where options can get quite confusing. And to that end, and for the purposes of this introductory video, I'm going to stick with just buying an option. However, note that as we go through the next videos in the coming weeks, I will be looking at selling options and also the combinations of buying and selling options and how they relate to certain option strategies. Okay, so that's 3 items on the checklist now ticked off. We've got the underlying asset, Apple shares. We've decided the option we're going to use. We're going to use a call. And we've also decided that we're going to buy that call because we think the Apple shares are going to increase in value over time. The final 2 items on the checklist are quite straightforward. And if we go back to the definition of an option, what we can see here is that we need to buy the option at a certain price, and we also need to buy it over a certain and defined time frame. And in the context of options, the price is known as the strike price, and the specific time frame is known as the time of expiry or the time of expiration. If we go back to the checklist, we've got the strike price of the underlying asset, our Apple shares, as checklist number 4, and the strike price is the price of the underlying asset, the Apple shares, that we want to exercise that option, i.e. the price of the Apple shares that we're thinking of buying or selling at. I'll run through this full example of the option in a short while, and in that example, I'll also talk about the price of the option as well as the costs of transaction fees and such like. But for the purpose of this checklist, I think the share price is going to go above $200, and therefore I'm going to be a little bit prudent, and I'm going to choose a strike price of $185. Okay, so the final item on the checklist is the time of expiry. I think it's important at this juncture to state that for those of you just starting out on your options journey, that I suggest that you use longer dated options more than shorter dated options. Longer dated options are less volatile and they'll certainly help with the stress levels. So anything above 6 months or so, I think is a good starting point. I'm following this principle, although in this particular scenario, I think that the Apple shares will go above $200 in the next 3 to 4 months. I'm going to choose a time of expiry or an option duration time, if you like, of 6 months. So putting this checklist all together, we now have a framework for our first option. We're going to have the underlying asset as Apple. We're going to use a call because we think the price is going to go up and therefore we're going to buy a call. We have a strike price of $185 and we're going to set the time of expiry or the duration of the option for 6 months. So what I'm going to do now is apply this call option framework to a real example. And I'm going to make assumption that we've now moved 4 months ahead and Apple's share price has indeed got to $200 per share. The chart you can see on the screen is a fictitious chart, but it shows the Apple share price movement from month 0 through to month 4, moving from $175 per share to $200 per share. We then have our call option strike price at $185, and again, current share price $200 and option strike price $185. This means that with all other things being equal, we have a profit per share of $15. That's the market price of $200 per share, less the strike price of $185 per share. But how many shares do we have? Do we have one because we have one option? No, it's actually 100. What I'm going to explain now is something that I've not seen explained very often in options beginners courses, and that is the fact that when you buy a single option in an underlying asset, in our case Apple shares, the number of individual assets within that option will differ between the asset class and sometimes the same asset class within different regions. So for example, if you buy a single option in a US listed company, you will have an option to buy or sell 100 shares in that particular company. But if you buy a single option in a UK listed company, you will have the option to buy or sell 1,000 shares in that particular company. And this gets even more complicated when you consider different types of underlying assets, for example, foreign exchange rates. And it is important to recognize this when you do your analysis, because this will affect the cost of the option itself and potentially the profit or loss you'll get from the transaction. Now, I'll look at this in more detail when we go through future tutorials. But if we go back to the example, you can see that if we have a profit of $15 per share and 100 shares, then our gross profit is $1,500. Now, I say gross profit because you need to reduce from that the cost of the option itself, as well as any transaction fees that have been levied on you for buying and selling the option. In our example, the cost of the single option is $1,000 and the broker fee is $50. And so our net profit is $450 or 43% over 4 months if you consider the $1,050 costs. Not bad, really. Now, there are a couple of things I want to point out here. And the first being that the $450 net profit is probably more than that. And the reason for that is we have sold this 6-month expiry date option in 4 months. And those 2 months that are remaining will have a value associated with them. What that value is will be determined by the market itself. It will be determined on how the market sees the Apple shares going forward. Are they going to rise? Are they going to fall? If they think the Apple shares are going to rise more, then it's quite possible that there is a premium within those 2 months, and that will be added to the value of the option when it's sold. This particular subject can be quite complicated, and I will talk about the constituent parts of an option price as we go through further videos. But at this point in time, it's just important to note that there is a time value that's associated with options, especially if they have quite a bit of time left before their expiration. The second point I want to pull out is the price of the option itself. I've used in this as an example $1,000, and that $1,000 looks like a finger in the air, a guess number, if you like, a miscellaneous number, but it's actually a real number that I got from a trading platform for a 6-month Apple call option at $185 strike price. I don't want to confuse this introductory video, but I think it will be useful for many of you to see where and how I found that particular price. And I found it on my regular trading platform, and I use a trading platform called Interactive Brokers. And on this platform, the screen you can see now is the option price screen for Apple shares. You can see here in the top right that this is Apple as well as on the top left. The number 100 next to the Apple in the top left is the number of shares per option. I mentioned previously that this is 100 for US listed companies. On the left, we have calls, and on the right, we have puts, with each showing the bid and ask prices for the options. Then down the middle, there are the strike prices. You'll also see that I've selected an expiry date, that being the 19th of April 2024, roughly 6 months away from when I recorded this video. In our scenario, we have a strike price of $185 and we want to buy a call. So we need to find the ask price for a $185 call, and you can see this highlighted here. The price is $10 and this is $10 per share, not $10 per option. 100 shares at $10 per share is $1,000, which is the price I used as the price of the option in our example. Now, I hope this makes sense, and if it doesn't, it's sort of okay because I'll run through this again in future videos. But if you do have any questions on this, please add them to the comments below. Now, before I finish, I'm going to quickly run through another example, and this being a put option example. And before I go to the example itself, I'm going to go back to my interactive brokers platform, and I'm going to find the price for an Apple 6-month put at a strike price of $165. You can see here that the price is $8 per share within the option, and we know that we have 100 shares per option, and therefore the price per single option is $810. And I'll note that as we go through the final example. Okay, so with the put option example, I've gone through my checklist again, and I'm sticking with Apple shares as my underlying asset, but this time we expect the share price to drop below $150 per share in the coming months. So I'm going to buy a put with a strike price of $165 and a time of expiry of 6 months. We now move forward 4 months to see the share price has dropped from $175 when we bought the put and now sits at $150. Our strike price was $165, which means that at the current time, our profit per share is $15. We have one option, and with Apple being listed in the US, we know one option equates to 100 shares in Apple, resulting in a gross profit of $1,500. I just showed you on the Interactive Brokers platform that the price of the option is $810, and with broker fees at $50, this means a net profit of $640, or 61% against our original expenditure of $1,050 over 4 months. Again, not bad, but remember that the profit may well be higher simply because there's 2 months left on the option. Okay, so that's pretty much it for this introduction. I've defined an option. I've shown you a checklist that will help you choose your first options as you go forward. I've also shown you where you can find the price of an option, and I've also shown you examples of a call and a put, the 2 different types of options that you'll be using as you go through your options journey. Next time, I'll jump straight into option strategies, and this will be a lot of fun because these are strategies that you can use right off the bat with current investments you have or investments you're considering. To that end, if you did like this video and you do want to be alerted when new videos on options come out, then please give us a thumbs up and subscribe to the channel. Also, if you want to know more about the Interactive Brokers platform, there's a link to that in the description. In the meantime, and as always, thanks ever so much for watching, and I'll see you in the next one. Bye-bye.